Silver has a real deficit story, but the viral price targets need a serious reality check. Subscribe for market alerts. Welcome back. I'm John AG. This is not a cute silver prediction. This is the pressure test. Silver has been in structural deficit. Reuters reported the market is heading toward a sixth straight deficit year, with 762 million ounces drawn from inventories since 2021. The 2026 deficit forecast was 46.3 million ounces, up from 40.3 million in 2025. That is real tightness. But a deficit does not automatically mean $300 silver, $500 silver, or COMEX collapse. Here is the key. ETF and ETP demand can make the market tighter because physically backed products can remove metal from available supply. But the viral 1.4 billion ounce deficit claim needs a transparent table before being treated as fact. Bullish does not mean blind. Now the $375 claim. Some analysts argue silver would be around $375 without COMEX. That is not confirmed market fact. It is a model. Futures, leverage, margin calls, shorts, and longs do influence price discovery. But the real question is sharper. When does physical demand overpower paper liquidity? China matters, but wording matters. China did not simply ban silver exports. The confirmed update was that 44 companies were named as allowed silver exporters for 2026 and 2027. That is control, not a total wall. Still, narrower gates can make buyers nervous. Then comes sulfuric acid. China was reported to halt exports from May, and acid matters for copper leaching, especially in Chile. Because only about a quarter of silver mine output comes from primary silver mines, byproduct pressure in copper, lead, zinc, and gold chains can matter. Gold is sending a psychology signal too. March 2026 saw record global gold ETF outflows, led by North America with about $13 billion leaving. At the same time, Asia had strong Q1 inflows, with China accounting for the bulk. Same metal, different fear level. The IMF did not officially say governments must prepare for immediate system collapse. It did warn, in April 2026, that financial stability risks are elevated. That matters with debt, sticky inflation, geopolitics, and fiscal dominance. Tokenized silver could become another demand channel, but only if backing, vaults, audits, and redemption are real. Tether's gold token model showed the concept, with major gold buying reported in Q4 2025. If those signals line up together, silver will not need hype. The market itself will show how small this space is. Bottom line, silver is tight, volatile, and data-driven. Watch deficits, inventories, ETF flows, China rules, sulfuric acid impacts, and gold leadership. This is education, not financial advice.